Hello once again, Alpha Chain traders. Welcome to the weekly crypto market recap. My name is Patrick Maldonado. As you know, I'm a junior cryptocurrency trader and market analyst at Alpha Chain Capital and founder of TCE Trading. So thank you guys for joining today. Sadly, I couldn't do the webinar yesterday. I want to keep a kind of a consistency, but sometimes we have external circumstances that kind of shift. So I do apologize for that. So just as usual, for those who are new or might be watching the webinar for the first time, I usually go through a specific structure. So first we cover some of the news of last week, see what's the environment around the cryptocurrency market, what's the market sentiment mainly for this week or what happened last week, so that we can analyze that. Then we go to market analysis, maybe review some of the trades that I made so that you have more technical knowledge of what happened and some of the resistances and some of the things that happened as well during the last week, and mainly what we could focus potentially on this week. And at the end, I like to do to cover some topics. During this webinar, we're gonna be looking at position sizing. So for you who are new, who have not traded in Binance, I would totally recommend to focus on this. And also at the end of the webinar, we're going to have a survey. So I hope that you can give us your feedback. We want to improve the webinars. We want to improve the way we deliver and possibly tailor them to your specific needs. So if possible, please go ahead. Now, if you allow me, I will go into the markets, into the news right now, so that we cover the market sentiment for last week. So the first news that I want to talk about, which is kind of ironic given the price action that we have right now, and we will discuss it in just a moment. But basically, this first headline reads, this Bitcoin whale sold at 12,000 Bitcoin price after hodling for 2 years. So it says a Bitcoin whale who accumulated 9,000 Bitcoin in late 2018 has sold after 22 months and 2 capitulation phases. Now, I don't really want to, again, what I like to do is for you guys to go through the news, read them on your own, have your own opinion. So I kind of like skim through it and then head to the main points that I want to discuss. So here in this graph, we see more or less when this kind of wallet started accumulating Bitcoin. So we see it was on a good period before the first capitulation around 6,000. Probably he bought a lot around 3,000, then as it was going up. And now a lot of people, or a lot of whales, as they're pointing out, they're looking at the $12,000 and $14,000 range. Now, if you have seen the market, we have seen that 12,000 has been a very strong support. I have been wanting to short 12,000. I was waiting right now because, again, one of the things that happen in the market is the more the price retests a specific resistance or a specific support, it usually means that it might break, right? It can be a strong support after 3 touches. You know that it's a very strong support. But if the price, at least by experience, if the price is closing very near to that support, usually, at least in the cryptocurrency market, tends to break it, right? This happened a lot here. If you see when the price was going down at 6,000 or around 6,000, was a very good and very strong support, but it touched multiple times. Here we can see once, twice, 3 times, 4 times, 5 times, almost 6 times it retested. So it is kind of likely that if it touches it more and more and starts closing nearby, it is the likelihood increases. It's not like it has to break, but the likelihood increases. Now, this is very important because now this gives us a hint about what is the big movers, or what are they doing, right? The big money in these terms of these whales, like 9,000 Bitcoin. I mean, you just multiply that times the price 10,000. You know, it's a lot of money that we're talking about that can really move the market. Now, that's exactly what I want to point out, because if we understand where are these kind of like big players trying to sell, we can potentially anticipate strong supports and strong resistances. So this is a very important one to keep in mind. This 12,000, of course, if it were to break, then the next real resistance that we're going to be looking at is the 14K area. But just for you to keep that in mind. Now, analysts fear a strong US dollar will dampen Bitcoin's bullish momentum. I mean, this is not recent news for you guys. We have been talking about the DXY, the dollar currency index. Even in Ron's webinar, we have covered a lot about this as well. So you already know that this is kind of like the first, maybe not indicator, but if the strength of the dollar goes down, usually other assets like Bitcoin, gold, even the stock market will appreciate, just because of the correlation, or the inverse correlation in this case, between the currency strength index and how overall markets perform. Now, here we can see Bitcoin and gold price dropped as the US dollar index rallied, leading analysts to speculate whether a strong dollar will slow Bitcoin's momentum. So again, this is kind of a chart that now, as traders, specifically at this moment, kind of like during the pandemic or almost post-pandemic, we have to take a look at, because it's a major technical chart to keep an eye on. Because basically, if this starts going up, and we're going to be discussing it a little bit on the technical analysis, on the market analysis, if this starts getting more strength, of course, we're going to be taking kind of some losses in terms of Bitcoin. Now, it is possible that still Bitcoin can push through, but again, this is something that I've said before, where we really need to think in terms of adoption. What's the Bitcoin use case? And that's also something that I'm going to be covering, the market analysis, kind of like the sentiment or the difference between kind of a recession or when there's fear in the markets, because we have seen that gold has been going up a lot, maybe not in terms of percentage more than Bitcoin, but in terms of the ratio in comparison to the stock market. It has. So it's going to be a very interesting analysis. We're going to go into that, but this is definitely something that you need to take into consideration, this chart specifically, because it's going to be dictating at least midterm what's going to be happening with Bitcoin and with other markets. Now, the last two news, well, it's kind of the last three news. This researcher reminds Satoshi's Bitcoin blogs to discover his secrets. Now, this is very interesting because there's a lot of speculation about who was Satoshi Nakamoto, right? He was the creator of Bitcoin, but there was a lot of speculation if he was one person, if he was a group. Then there's a Craig Wright, kind of someone who's supporting Bitcoin Cash, talking about he being Satoshi Nakamoto. Now, this might not have an impact on the price, but overall in the blockchain community, it's important for you more or less to know and to understand what are these headlines. And the reason is because these people, they're in social media, they are public figures, and what they have to say might impact in one way or another the overall market sentiment. Just to resume, because this goes very, very technical, there's a lot of jargon that it's not really worth going through it, but the summary or the conclusions of this kind of research that Sergio Lerner was doing basically points out to the following. It says, if Lerner's conclusions are correct, that would lend more credence to the hypothesis that Satoshi Nakamoto was a single person and not a team. This would also put another nail into Craig Wright's claims of being a Bitcoin creator, as he indicated numerous times that he used dozens of computers to mine the early blocks. And there's been a lot of controversy from his part, because again, he was saying that he was a Bitcoin creator and he had a wallet full of Bitcoin, and and this is important because if he is indeed or not, and then he's supporting another project, that takes kind of a little bit of legitimacy in terms of Bitcoin and how people see the original Bitcoin, right? So that's why it's important to kind of keep in touch with this news, even though they might not directly affect the price action. Now, the next one that we're gonna see, very interesting. Again, we talked about this before, about Yearn Finance, basically DeFi. For all of you who don't know, I hope that you watch Adam's webinar. It was very insightful as well in terms of covering what DeFi or decentralized finance is. But basically it's a way to remove the middleman in the banking sector, so you can have lending platforms or decentralized lending platforms, and you don't have someone taking kind of like a cut in the middle, right? You're interacting peer to peer. Someone is lending, someone is borrowing, and everything can be fixed with an algorithm, which is why it's so revolutionary right now, because it can create a better environment for both. Yeah, it can create a better environment for both the borrower and the lender. Now, the important thing here is to notice that this specific token achieved a record high at 38,883 as its market capitalization surpassed 1 billion. So, I mean, what this tells you, I don't really want you to focus on the price, because the price is gonna really be fixed on the supply, right? The less supply there is, the more the price might be. But the overall market cap is still around 1 billion. Now, these bits, again, I like to play devil's advocate, and I like to play kind of like the contrarian view, mainly in crypto, because again, sometimes because of the lack of liquidity, there's a lot of good opportunities in the market. Even though, you know, you might have missed the run up to the upside, there's always a potential. Of course, it's always difficult to really know where the price is gonna reverse, but there's a lot of potential in there as well. So there's definitely something that you need to take into consideration. In traditional markets, usually following a trend is the best you can do, but in parabolic moves such as Bitcoin and other altcoins, sometimes it is very profitable to be a contrarian because of the lack of liquidity again. Now, this is basically what I want to focus on this news. Here, somewhere around here, we can see that some traders are excited, but they feel this is overvalued. I mean, that's not crazy to think. We have seen a lot of projects, and that's something that I kind of covered a little bit during last webinars. For instance, projects as Cardano, right? They increased their market capitalization for billions, but still they are just initiating the platform. Indeed, Cardano, they just launched their mainnet, so that means that there's not a lot of developers, there's not a lot of actual use cases, right? In comparison to something like Ethereum. So they have potential, of course, but just as Adam said as well, even though you might have potential for a cryptocurrency to go up, I think that Bitcoin changed the way that we are trading the market, and that's another topic that I want to discuss today, because ever since 2017, the end of 2017, this bubble, we have seen an increase in market volatility. I think Bitcoin served as the catalyst for this new trading environment. You might see it was not only the Bitcoin bubble, there was the altcoin bubble, right? The ICO bubble, with everyone just wanted to throw money at ICOs. They got overvalued, and then because they didn't deliver anything, or they were just waiting to bank out the profits, the market started going down. We didn't only have kind of that. Which other one? We saw the rise, for instance, in the equity markets, which after we saw this drop, we saw them inflating because of the printing in money at rates that we have never seen before, right? To the point that even right now, we're above all-time highs. But if you look outside at the situation on the streets, if you look at the situation at the overall industry, you still have a lot of people who are jobless, right? You still have a lot of people who maybe they can't pay rent, who are starting to default on some of the payments because they don't have a job, or they're being supported by the government, yet the market's still going up. So that's something, again, to consider. I brought it up during the last webinars as well, but it's kind of important just to keep in mind what the average sentiment is. And usually what you have is that the market sentiment goes faster than the actual rationale. What I mean is that people think about the market, or their feelings of investing in something are faster than what is really happening. This happened during the pandemic. There was a lot of fear. The market went even lower than it should have been at that time being. Why? Because people fear of the future. Now, the question here is, how far ahead are they looking at? The same is with the recovery, right? If we speak in terms of what's actually happening right now, if we were talking kind of about this theory of the markets being efficient at all times, right? That's an important financial theory. The markets are efficient. We are very far apart from that, right? Because we see what's happening right now. We see, how people's lives are changing, but still we see the markets at all-time high. Now, in here, the only thing that I wanted to point out is that they mention volatility being a factor. Let's say, I want to find the exact paragraph, but they basically say that if you wanted to sell, let's say, $100,000 of year finance, you will move the market a lot, right? In terms or other platforms, I think they mentioned length in here as well. Here it is, a year finance may be rising right now, but it's illiquid, as very little of the supply is available on exchanges. So if you try to sell 100,000, you'll tank the price by almost 3%. Now they'll compare this for instance, to Lend, which is another kind of like DeFi platform for lending. So if you sold 100,000 worth in there, maybe you would tank the market 0.2%. So that's a huge difference, right? So this is kind of the main point with cryptocurrencies, and this is why we see such drastic moves to the upside and to the downside, because a lot of people push with FOMO, taking the orders, but maybe there's not a lot of people actually buying, right? The people are buying with an emotional bias right now, and this is why we as traders really need to be careful in the cryptocurrency market. It's not really because it's dangerous per se, but because the market exuberance, in contrast or in comparison to what traders are actually doing, it's not equal. Maybe a lot of people are buying the momentum, and then there's not a lot of orders after that. So they bought the momentum, and then there's illiquidity to the downside. So a lot of people, a lot of smart money take that opportunity. So when there's a lot of liquidity, for instance, right now at 12K, there's a lot of orders, there's a lot of FOMO, there's a lot of exuberance. They use that momentum in order to cash out, because if they have like that, 9,000 Bitcoin, you can't cash out everything just at once, right? You will tank the price, you will have slippage, and you will lose eventually money. So you need a high liquidity moments like FOMO, or when all this is happening, in order to get out of the market. Now, the last one, I don't really want to dwell too much on this, is kind of one of those predictions. So Bitcoin price to 500,000, Winklevoss lays out ultimate bullish case. Now, what they're basically talking about is that they are comparing the supply of BTC to those ones of gold. I mean the market cap, right? So if Bitcoin had a market cap of gold in terms of how many people they're investing, basically Bitcoin would be worth 500,000. Now, this is not, if you're into cryptocurrencies right now, if you are new, you will start noticing there's a lot of speculation to the upside, right? Now, I'm not saying in the long run Bitcoin can't go up. I'm a long-term holder of Bitcoin, and if the price start coming down, I will enter Ethereum, I will enter other ones. But it is a fact that a lot of people are over exuberant, and they throw just magic numbers, right? Out there you might hear 500,000, you might hear 100,000, you might hear 1 million. I mean, there's just a lot of speculation out there. Now, this doesn't mean that the price can't go up as well. We are traders. We want the price movement. We don't really care if the price goes to 1 million. We really want to focus on, if it's going to go to 1 million, what's the best scenario, risk reward that we can take in order to take profit from that volatility, right? That's what our aims as trader really is. I mean, if you are an investor, then you don't really care, because you're probably going to be investing for 3 to 5 years at the very least. So the market fluctuation wouldn't really affect you. But I wanted to bring this one because that's something that you get a lot in the cryptocurrency market. And I think it's mainly because a lot of people missed kind of like the first bubble. So they have that hope that everything is going to come back again, even though the market conditions are completely different. And this I mentioned in the past webinars. In fact, just when the bubble popped at the end of 2017, at the beginning of 2018, when that bubble popped, what happened? Futures trading started in Bitcoin. So people had a new incentive for shorting. So if you have a lot of Bitcoin stored in there and you were scared of losing because maybe it's going to go down, well, you can hedge it. So there wasn't an incentive to start shorting. And that's why we saw all of this movement. And this is why we need to think about that. There's not only one way to make money in Bitcoin, right? It's not like you can only make money if you buy. You can also make money if you short. So that changes the overall market sentiment, because now there's an incentive to both buy and also to sell. So the market conditions are completely different. So I just want you to be aware of those things. You can make your own conclusions, of course, but the fact that a lot of people just say that Bitcoin has to go up, at least the fundamentals behind that, it's a completely different market condition. So might happen, might not happen. Now, what I want to focus on is on some market analysis. So we're gonna be going into kind of a more macro picture. This might look a little bit confusing right now, but I'm gonna explain. So before, what I want to focus is kind of like the macro picture. And I've said this, we were kind of in this area of consolidation right now, right? And I believe I cover, and if not, I'm gonna cover it right now. It's normal for Bitcoin to have this kind of BART patterns, and we're gonna go again with this theory of illiquidity, right? When the market tends to go up, usually what you will see a lot of the times is that there's kind of like a pump, consolidation, and then a drop back to where that first move initiated. And this is all because of liquidity, and mainly illiquidity. So people start buying, there's not enough buyers after that. People got exuberant, people got FOMO, they just bought the market when it was going up. And then since there's not market pressure to the upside, because there's no FOMO at those levels, then sellers starts regaining kind of like confidence, dominance there, and then they tank the price. And you can see this a lot over the price. Here again down, consolidation, back up. Here there was again down, consolidation, back up. Even if you look at the inverse in there, up, consolidation, back down. So this is something that happens a lot in Bitcoin, and probably won't change until the market conditions favor liquidity into the market in comparison to other markets, right? You can say that Bitcoin is very liquid in terms of being able to trade, but if you compare it to FOREX, for instance, FOREX is almost 5 trillion per day in the overall volume. So this market is tiny in comparison. If we were to trade the volumes that we trade in FOREX, probably Bitcoin would be worth more than 500,000. Which brings another topic. Why are people not really investing? Because big hedge funds, they know the volatility of Bitcoin. So something that I like that Adam explained during his last webinar was that it is true that a lot of institutions are putting 1% into Bitcoin, right? And this is good because of the exposure. But you have to remember, why do they put 1% and they don't allocate maybe 10%? Of course, the reason is because of the volatility. It's different to have a daily moves of maybe up to 10%. Let's see, from this peak up to the price right now, around 10%. So if you would have bought as an institution, which you will have a lot of capital, you probably wouldn't want this to really affect your position. You want to be kind of like a hedge or diversify your portfolio with Bitcoin, but you probably wouldn't focus as too much as of right now. Maybe in the future things will change, and we're going to be talking more about the analysis. But at least what I want you to see, again, we mentioned during the last webinar, this 20 EMA. It looks like Bitcoin is kind of stagnating at the moment in here, which is very interesting. And again, there's a potential. I'm not saying it's going to happen, but there's a potential that this might continue going down. And again, this is something that, like they say, average Joe or other traders might not really take into consideration, because they think Bitcoin only has to go up when it's normal. And again, I pointed out the other day that it's normal to have drops of about 30% and still be kind of bullish, right? I mean, here, if this were to fail and comes back down, we have a very strong support around here, right? We've tested once in here, we've tested twice in here, and if we go here 3 times. So we know that that might act as a strong support. Does it have to be a support? No, it could go back down. And again, this is the theory that I talked about before when we looked at the CME futures. I hope that you remember that. About the gaps, self-fulfilled prophecy. Basically, a lot of people trade these gaps and they think they're going to fill. So the fact that they actually trade this makes it so that it actually happens. So we have a potential target in here. And again, I'm not saying it has to go down, but we need to consider kind of these things in the overall picture to understand what the market sentiment is. Now, in terms of the macro, of course, we have to understand that these movements to the upside is also a lot because of decentralized finance, right, of DeFi. And that's why from these two, if we go back here, let's take a look at Ethereum instead. Let me just bring up that chart. We have seen it going crazy to the upside, right? Again, the reason is because a lot of people are investing more in Ethereum because of DeFi, which is a disruptive industry. Again, don't get me wrong. But again, there is not a lot of liquidity in the markets. And sometimes when this happens, and actually I wanted to short around $500, but it didn't reach that level and it started going down. When this starts happening, you have to be cautious in the cryptocurrency market, because over exuberance, the higher the movement of the price is, sometimes the correction tends to be kind of bigger and faster. So that's something I want you kind of to consider when you are trading, because it's very useful to have a contrarian view and have both views, right? If you think the price is going to go up and there's a strong support and a strong confluence to support that theory or that thesis, it's good to have that, but also take in mind that because of the liquidity, prices can go down as well. Now, what I wanted to do, kind of like a recap, you might see it in an article that I wrote for Alpha Chain, but it was basically pointing out the differences or a comparison between Bitcoin, gold, and the stock market. And this is kind of just to discuss more of what Adam said in his last webinar, because it is true that a lot of people see, and we've discussed this before, they see Bitcoin as kind of like a hedge to the economy, right? In terms of inflation, it's a deflationary system. At one point, you can't create more Bitcoin. So, of course, if, for instance, what's happening right now, if we go to the DXY in here, which is the dollar strength index, we will see that the correlation, and this is what I wanted to point out from the beginning. We saw this drop, and it's not a coincidence that we saw some strength here in the dollar strength index, right? So this is why we need to keep into consideration this chart, mainly as of right now. After the first Bitcoin bubble, again, I brought it up. There was a peak in the dollar strength index, and then when it was going down, that's when Bitcoin really rallied to the upside, right? And this could still be what's going to be in play. There's nothing saying that this broke to the downside, and now it's retesting kind of this support, and it might continue going down. There's nothing saying that. But a lot of people, even if we take a look at, for instance, a pure technical analysis, which in this case, I don't think it would really apply only, right? You don't want to only rely on technical analysis for this, because again, what the Fed does, might oversee all of these technicals, but you can see, what a divergence and kind of a double divergence around here. So the RSI is going to the upside, and what's happening with the price action is going to the downside. So a lot of people might see that as potential weakness for the bears in terms of the dollar strength index, which might lead into Bitcoin losing some of its gains, of its recent gains. If the market, the dollar strength index starts going up, of course, we might expect Bitcoin, we might expect gold, even the stock market starting to go down. Now, what I really wanted to point out in here, which is very interesting, I wanted just for you to really see the correlation between the different assets. So again, and this comes because of the theory that Bitcoin is the new gold. Now, during that kind of like article that I wrote, which you will be able to see, I talk about what is Bitcoin most correlated to. A lot of people say it might be the new gold, and I'm not saying it can't be, right? There's a lot of properties, a lot of similar properties that they share. So there's complete the possibility, the use case that in the future people will see this kind of as a hedge against the economy. Now, if we go back to the gold charts in here before doing kind of like that one-to-one comparison, actually you will see that I was pointing out this descending triangle, which potentially might lead, again, these are indications, right? Macro indications of what some people might do. So if this starts going up, it is very possible that the dollar is going to gain some strength. So we need to wait that out. It's not a confirmed kind of pattern as right now. But what I wanted to point out in here is look at how this has gone to the upside, right? And this started basically before the pandemic wave. So here is the pandemic wave, right? We see this drop in here, which again, this is what I was talking about in terms of what happens in a real recession, right? And this is something, again, that not everyone takes into consideration. If there is a strong crisis, right? Let's call it crisis, not really a recession. If there's a crisis in the world, what do you need to survive? Do you need Bitcoin? Do you need gold? No, you need cash, right? Because cash is what you're gonna be using to buy food. Cash is what you're gonna be using to pay your bills. Cash is what you're gonna be using to pay your rent, to have a shelter and whatever. This is talking about a crisis, right? I'm not really heading into a recession because that's another topic. During a crisis, all the markets tend to go to the downside, right? Because again, the idea is, what do you need to use in order to survive? At least in modern times. And there might be a lot of contradictions or a lot of opposite views on this, but this is what I've seen. And you can see here across all markets, even in gold, we had kind of a strong movement to the downside. Now, what happens is when there's fear in the overall markets or in the overall economy, but there's not really a crisis, that's when gold starts going up, right? And we've seen with the recovery, if we speak in terms of ratios, if we grab this kind of pandemic peak or pre-pandemic peak in comparison to the price action right now, here in Bitcoin, you can see this was I'm going to highlight around here, this was the pre-pandemic peak, and we are higher than that, right? Even if we go to the stock market, which I will do in a moment, we are higher than that peak. But in terms of ratio, in terms of ratio here, we did go way higher on gold, right? Why? Again, because gold is kind of like the standard hedge. Elders who don't still understand Bitcoin, what they're going to be looking at, they're going to be looking at gold in a more kind of like old-fashioned way. And it will take that distribution of money from old people into younger people to start shifting that sentiment more and more into Bitcoin, and potentially be having Bitcoin as a kind of like the gold standard or the gold hedge as it is right now. Now, in terms of price action, you can see that it's kind of similar, but still the price action, again, in terms of ratios, maybe not in terms of percentages because Bitcoin is more volatile, but in terms of ratios, it's still favoring gold more than Bitcoin. Now, I have these two graphs in here because this is what I want you to take a look at. So we have the price of gold in here, this blue line. So you can see that there's some correlation, you know, in terms of where the price is going. So let me see if I can kind of shift this a little bit so that we can really see what's happening. So what I'm gonna do is again grab this pre-pandemic peak in order for you to see. So we see that for both here there was a peak, right? And we see that again, since there was a crisis, both still went down. And then as things went up, again, they have a very similar price movement in these terms, right? Again, but here you can see that still price action or the ratio is favoring gold a little bit more. Now, I'm mentioning this because if we bring the S&P, which is a good indication of the overall economy, at least in the US, you know, if we kind of put things together around here, I hope that you can see what I'm meaning in terms of why the correlation is way stronger with the stock market right now in comparison to gold. I mean, this, you could pretty much argue that this is the same chart, right? Not from, it seems that the pandemic was the catalyst for adoption in terms of how the institutions were starting to gather Bitcoin, because probably they saw this and they started putting that 1% or buying that 1% for Bitcoin, right? So that's kind of one hypothesis. Again, this might or might not be true. I don't know exactly what the institutions are doing because, you know, that would be inside kind of information. But what you can see is that since that drop, the correlation has been very, very strong. And again, this might relate to that 1% that a lot of the institutions are putting into Bitcoin. Right? So if they're going to be taking risk out or deleveraging from the market, they are going to go through that all the way around. They're not just going to reduce their exposure on the overall assets and keep maintaining that 1% in Bitcoin, right? They're going to try to get out on the market entirely in the same percentages as they're in. Now, again, this is not me saying that the market has to go down, but this brings kind of like this hypothesis of if we're way higher than this previous peak around here in terms of the overall economy of the stock market, when you see outside how people are still without jobs, how people are still kind of depending on the government for some of that kind of aid relief, you know, and a lot of people, I mean, we have seen even with Robinhood, a lot of retail traders are just going into the markets with that additional money. So, and right now, I think the point, it has never been easier to get into the stock market. It has never been easier to get into Bitcoin, right? You have apps even like Revolut. You can go in, buy Bitcoin, just like that, right? Of course, you have to do your KYC, which is your customer kind of identification. But you have access to Bitcoin, you have access to the stock market, you have access to commodities like gold with a push of a button. So it's never been easier. And this brings, just to end kind of with this, well, there's still another topic that I want to discuss very quickly, but in terms of the market analysis, this is why I said that Bitcoin probably was the first catalyst in terms of the new trading model, which the market goes up, exuberant, then comes back down. Again, markets exuberance, then comes back down. And we are starting to see that in the stock market, right? The market came up, down, and then again, exuberance. So again, this is just for you to take into consideration your trading, taking into consideration the macro picture, because in Bitcoin macro picture, yeah, you can invest for 5 years, but you can expect big drawdowns, you can expect big moves. So that's basically what I want to cover in terms of market analysis. Now, for you guys who are new into trading, who are new into Binance, I wanted to talk a little bit about position sizing. So I talked about risk management before during the last webinar in terms of, okay, if you want to achieve, I don't know, 5%, 3%, 2%, whichever your goal is, you have to select a correct position size in terms of percentage from your account in order to minimize risk and also achieve those goals, right? And I mentioned that, for instance, maybe if you're risking 0.5% per trade, if your strategy allows for it, you can be successful with that and you can make substantial profits. Now, position sizing is very important, and I know some of you might start looking at some calculators. If you're doing the course, you will see that they go into some videos as well at how to do it. But here, this is why I have Binance and the calculator in Binance, because you will be using this a lot. And something that I even tell my students at TCE Trading, which actually some of them are starting to trade their real accounts. So it's very interesting to see as well the learning from you teaching or you giving this type of webinars and comments. There's another learning process. So something that I've noticed with some mentorship that I've done with my students, that even though they understood exactly how to go into TradingView, how to kind of put stop losses, take profits, etc., they didn't really understand how to transpose that knowledge from TradingView into Binance, for instance. So in brief, I mean, I'm just grabbing an example here. This is the trade that I wanted to get in Ethereum, which it didn't go into there. But let's assume again you have a starting capital of 1,000, just like you would start with Alpha Chain, and you have maybe you choose your risk to be 0.5%. Now, what I want to go is how you quickly calculate, and I know a lot of you will already know how to calculate this, but this is mainly for the people who are new. Let's say I have here my entry at 500, stop loss 530, and target at 410, right? So that's kind of like your setup. Regardless if this executed or not, that's the setup. Now, what I want you to start doing if you're new is going into this calculator and start kind of getting more used to it, because it's kind of like a muscle memory, but for the brain, right? The more repetition you do on this, the faster it becomes, the more you execute it, and the more accurate you can get into the market. So, for instance, in this case, it does not really matter the quantity, but just to be completely sure, we're gonna go into Ethereum around here, and then we're gonna head into the calculator once again. If this allows me, I might have to refresh it. Okay, so now we're in that calculator for Ethereum. It's gonna be the same for all of them, but I don't want it to confuse you. So in that case, we're taking a short, right? So we put our entry price is 500. Now, when we want to calculate the position size, we want to focus on the stop loss always, right? We don't go before and measure the profits instead of the risk. We want to focus on the risk, because once that we determine the risk, if our edge is good, profits will come along, right? So we go in here 530, which is the stop loss, and you might have some fancy calculators where you can put the initial, your percentage, and it will calculate exactly the position. Now, you might not want to have another tab open. Maybe you want, if that's your cup of tea, again, go ahead. But if you want to do it quickly and with Binance, for instance, every time what I do is I put 0.1, I put calculate, and then again I think about if I have $1,000 accounts and if it's 0.5, of course, I want this to be -5, right? So I kind of iterate in order to get that amount. So here I increase to 0.15. I know it's still a little bit more. Maybe I'll go 0.17. I know that's beyond that, so maybe I'll go with 0.16. I don't think it will let. It actually allows you more. Now this is up to you how accurate you want to be. But something that I really think is useful and something that I also recommend my students at TCE Trading is do this over and over again, because you need to become quick if you want to enter the market. And the reason is because you don't want to enter the market if you don't know your total exposure, right? You don't want to just put up a random position size and say, okay, that's it. You want to make sure that you understand what you are risking before entering the trade. That's very important. And this is why position sizing is very important. Now, you might have other questions, and this is, again, why I want you guys to go into that feedback survey, letting us know what you think about it, and probably we're gonna start putting more polls regarding topics and so on, because this might be something very important, mainly if you're starting to trade, right? Because again, you might go into Binance, maybe you read the instruction booklet, but maybe in practice it's different to the theory. So I really want you to be more engaged in that sense, so that we can tailor this for those who you need, and also cover other topics. So in any case, traders, I hope that you enjoyed the webinar, and if you have any other questions, I mean, if you, something that I want to do, I forgot to mention as well, is if you have questions during the webinars, just write them in the chat, and then in the end I'm gonna go through them. We need to review some of the things that we covered, right? So that it's quicker. But basically, this is what I wanted to show in the webinar in terms of analysis. I hope that you enjoy it. And if you have questions right now, you can write them in the comment section, so that we have a more organized way of answering them. And if not, of course, you can go into the Slack chat. We can still be covering in that. Someone was asking in terms of I'm kind of like re-uploading these videos and doing a written summary, mainly for some of you who might not have time. You want just to go through the main topics, to understand what the webinar was about. So I'm working with that in terms of further work with the webinars. But in any case, that was everything. I hope you guys have a very good day. I don't see any questions, so maybe from next time we can be focusing on that. So that's it for today. I hope you enjoyed the webinar, and I will see you next week.